Hi, I'm John Mayfield, the real estate tech guy, with another Global Real Estate School podcast. Welcome to the podcast and YouTube video. Thank you so much for joining. I'm John Mayfield, the real estate tech guy, and we are continuing our series with USA Mortgage. And by the way, we have a great guest today. I'm excited to interview Alan. He's in Hawaii, so we should all be very jealous of Alan because of the beautiful weather there. Alan, I go to Hawaii quite a bit to teach for the Hawaii Realtors, and so I have lots of friends there. But thank you for joining us.
Yes, thank you for having me. And it's great that you can visit Hawaii. I'm sure you rarely ever turn down an opportunity, right, to teach here. So
I know. The bad thing about COVID with Hawaii is that they have figured out that, oh gosh, we can do Zoom meetings and we don't have to bring the speakers all the way over to Hawaii. So I've done a couple of sessions recently, and they were like, oh, can you just do it via Zoom? And I had that happen in the Bahamas. But anyway, we're glad to have you with us, Alan. And by the way, USA's license number is 227262, and they're an equal housing lender and just some great folks. And Alan and I, just briefly talking before we started this, we both have a similar passion. We love to work and help first-time home buyers. And Alan, I don't know, there's something really fun and exciting to be able to see a couple at the first closing be able to get the keys to their new home and know that they were able to get a home loan. And so you were telling me about a couple of different programs. And by the way, I should have mentioned Alan's last name, and I'm going to hopefully pronounce this correctly, but Shimozono. I think I messed it up, but okay. Okay. There we go. Good. They took phonics out of school when I was a kid, so I've been forever taunted. But talk a little bit about first-time homebuyer programs, because USA Mortgage has, we normally have FHA, of course, which many first-time homebuyers use, and rural development, which I'm sure you have in Hawaii as well. But you were telling me about a couple of other programs that you really are passionate about.
Yes, the two programs I'm passionate about are Home Ready and Home Possible. So of course, Home Ready being the Fannie Mae product, and Home Possible being the name for the Freddie Mac first time home buyer. And yes, I'm very familiar with USDA guaranteed loan here in Hawaii, as well as FHA. Yes, FHA as well. Right.
So let's talk a little bit about the Home Possible. How is it different than, say, a standard FHA or you? Well, first of all, we want to make sure that our audience listening, and a lot of the audience are new real estate licensees. They're in school, but we have people, existing real estate licensees. And I think one of the things that there's a couple of neat things we can talk about here is, number one, Alan can help you with the first-time homebuyer program. So I really want to get into the Home Possible and the USDA. But for me, and speaking to my licensees that are watching, you will normally find buyers who can afford the house payment. It's just coming up with that down payment that seems to be the big obstacle. And so having solutions like when we say USDA or rural development loans, a lot of times they allow for lower down payments or alternative ways that the seller can help pay for some of the closing costs. So that's why we kind of lean towards these programs. But Alan, one of the things I've discovered, and you can talk about as well, is that for the licensees watching, USA Mortgage has this whole printing shop where if you wanted to canvas or send postcards to an apartment complex saying, hey, if you're thinking about buying a home in the near future, reach out to me. We have a program like Home Possible. So I'll let you tell us about that now. But I just wanted to kind of tie that in for our agents to think about how is US Mortgage, who's going to help you find those buyers. And now, Alan, you can help kind of put the deal together. And so, sorry I talked so long there, but just wanted the people to know that. But what is Home Possible? Because I've not heard of that.
Oh, okay. Well, simply put, Home Possible and Home Ready are the two programs where it allows a borrower, usually a first-time home buyer, but not necessarily, and I'll talk about that in a couple minutes. But basically, you can get into a home or condominium townhome for as little as 3% down, whereas FHA
Okay.
financing, you have to have 3.5%. So in this time where property prices and appreciation are just unprecedented, 0.5% on, let's say, a $500,000 condo, or here in Honolulu, median house prices upwards of I think 1.1 million right now. But there are still homes and single family homes, in the $700,000 to $800,000 range. So 0.5% can be quite a bit of money for a first time home buyer. So if you don't have to have that 0.5% extra, and you can just put 3% down, that's, I think, the beauty of Home Ready and Home Possible, because a lot of first time home buyers have the common misconception that they have to have that 20% down, which is not necessarily true.
Right. Said a 0.5%, even that's 1,000, could be $1,000 basically that it could, if I'm doing
Yes.
my math correctly. I don't have my calculator in front of me,
Mhm.
but for a first time home buyer, and and every marketplace is different, that's a lot of money. But even like you said, when you're looking at 500, 700,000 or higher, that could definitely help a lot of buyers out. What's a good, let's talk about, this is something we haven't talked about on some of the other interviews I've done, but walk us through, say, a typical home that a first time home buyer may purchase under this process. What kind of debt to income ratios would they need? Now, we talk about that in the real estate school, but debt to income being uh, percentage wise, is there something that a borrower could quickly look at, or do you have tools on your website that can plug that in?
I'm not exactly sure about any tools on our website per se, but as a lender, as a loan officer, we should be looking at Fannie Mae and Freddie Mac both have websites, interactive websites, where you can actually plug in the zip code or an actual address of the property. And what the Home Possible and Home Ready does is that they usually want to know that, first of all, a borrower doesn't have more than 80% of the AMI, or area median income, for a given location. So that's the first qualification
Okay.
for a Home Ready or Home Possible. So there's a little chart. You look at somebody's income, and if you've evaluated properly, they shouldn't exceed more than 80% of the area median income, or AMI, for a particular area.
And
So
that
that's the
reminds
first
me
thing.
of another good point, is why it's so important for agents to really get with a loan officer like Alan, and have that relationship where Alan can then look at all of the information for your buyer, because maybe they make too much money to qualify for this loan, but there's another loan product that would work. Sometimes I've had people that I thought we wanted to go VA because they were a veteran and had their VA eligibility, but yet the loan officer knew a better product that could save them more money and get the job done. So call Alan and he can help lead you down that path. Are there any things that you're seeing buyers like running into problems, student loan debt, or other issues, or are there sometimes people come to you and say, "Oh gosh, we don't think we qualify for a loan because we filed bankruptcy, but yet the bankruptcy maybe was medical related and you could verify certain things like that." Just any of those kind of interesting things that you've noticed or would like to comment?
I think as far as the most common misconception again is for most borrowers is that they believe that they have to have 20% down. Many times the issues revolve around credit, and what's an irony is that I often find that the clients who are the most worried about something actually are not too bad, and I end up qualifying them. It's when clients underestimate and they may not want to
Yeah.
tell their loan officer something or their agent, and then I find out I pull credit, and then we actually find out we may run into some difficulty. So it's very funny. I find that it's sometimes very opposite. I had a borrower who was worried about. They made a payment 2 days late on their credit card. So I said, other than paying a late fee, you're okay. And I looked at their credit, it was fine. They had no lates, but they were just so terrified that they had paid a bill 2 or 3 days late. And I said, well, other than paying a little late fee to your credit card company, that's not so bad. It really didn't affect our process at all. Um, and so that's one thing. People think the small things are major, and it turns out not to be. And sometimes they may not disclose something, and it turns out to be something, very sizable. But in the market here in Hawaii, I think the challenge is obviously price point, number one. Number two, credit. And you did actually let me know about student debt. So I want to talk about that because a lot of people are. Also worried about student debts. So typically what I come across on student loans are two things. Number one, many borrowers are on an IBL or IBR, which is an income-based repayment. So basically, according to their income, the student loan servicer will go in and set their payments accordingly. So as they make more income, they're able to kind of step up their payments. But if their income is at a certain level, the payments are commensurate and lower generally, with that. So that's one thing, IBRs. The second thing is deferment. And of course, with COVID and, that situation going on, a lot of loans are in deferment. In fact, I still have clients coming to me. Their loans are now coming out of deferment, deferred payments, July, August, September, October. And so typically what happens is that when they are in deferment, obviously as a lender, we need documentation on that. But the second thing is when we pull up their credit reports, we see a zero payment. So we have to be careful as a lender to make sure that we know what their student debt is, and we typically have to substitute a payment in, which is roughly, I believe the guideline is 1% of their balance. So if they had a $14,000 balance on their student loan, we have to calculate a payment of about 1% of that, or $140 a month.
Okay.
So that's something that many borrowers are not aware of. But often I find more the case is the IBR, the income-based repayment, and generally that will be lower than even the 1% for most people starting out in a job or whatever, given their field of work. So yes, student loans are often a big question. And it's not only the students. I have a lot of parents who become co-borrowers, and of course they've co-signed for loans. Parents might be applying and they have a student loan and say, oh, my son or daughter is in college. And so they're not aware. They think that their payment is zero because it's deferred, when in actuality they might have, a couple of sizable payments. And so that's, I
I
think,
hadn't
one
thought
of the
about that.
challenges there.
Very interesting. And you talked about something earlier, and I think that we should mention this, that sometimes I've had buyers who come in and I'll say, are you a first time home buyer? And they're saying, no, we've owned a home. But then I find out that it was 6 years ago or 4 years ago, and they've been renting for the last 4 or 5 years. Is the requirement still the same, or the rule that as long as you haven't owned a home for 3 years, you could qualify as a first time home buyer, or have they changed that? And so for our listeners or agents, the key to that is they can't have any mortgage interest on a tax return for 3 consecutive years. And if that's the case, even if they owned a home 5 years ago and sold it and they've been renting, they actually, in the eyes of many of these lenders, are could qualify as a first-time home buyer. Is that correct? Or
I'm going to say that there's two parts to this answer. So part A and part B. So as far as part A of my answer, yes, if you haven't owned a home according to your tax returns for the last 3 years, you are eligible for Home Ready, Home Possible. Also, Fannie Mae and Freddie Mac make the distinction that even if you've owned a home and you sold it in the last 2 or 3 years, um, and you don't currently own property, that's okay. You can actually still qualify for Home Ready and Home Possible. Um, Part B of my answer is going to be if state by state, your bar happens to be part of some sort of down payment assistance program, or they're part of a special lottery for affordable homes. That is where the 3 year requirement normally kicks in, and so there's some overlap and kind of misunderstandings about that 3 year rule. So if you have a home buyer who with the lender is going to go Home Ready, Home Possible, they only have 3% down, but they also are, let's say, applying for special housing or for affordable housing. State by state requirements may actually, especially in Hawaii, may actually prohibit you from even applying for that lottery, because on your tax returns you have to show the lender and show it's usually the housing agency or state state office that handles that, proof that that person has not had any interest in any real property, whether it's rental or otherwise. You haven't had title on any property in that state for 3 years. So if let's say, for example, I did have somebody who came to me, they were living in Hawaii, but their property, they had title in another state. It didn't apply to them because they were okay to apply for the lottery here, because they did not own any property or have any title to any property in the state of Hawaii. So that's
okay,
part B of the answer. So yes, on that case, when you're
good.
applying for affordable programs or some sort of state-sponsored program, down payment assistance here in Hawaii, there's up to a $40,000 zero interest 20-year loan, which is forgiven after year 10. So whatever the balance is after year 10, which should be 20,000, it's actually forgiven. So if I had somebody on that program, yes, they cannot have had any ownership in any Hawaii real property in the prior 3 years.
Okay. Very interesting. Well, the last question I just kind of, I guess, or want to remind people who are watching, you might be thinking, man, I would love to own property in Hawaii as an investment or get a condo to go over. And of course, with all the Airbnb and different things going on today, but you could actually help someone who maybe is on the mainland that wants to buy a condo for their loan needs. And I'm just curious, I guess you do a lot of long distance type of finance applications with buyers who are relocating to Hawaii or buying investment property. What are things that you would encourage someone who might be thinking about investing in real estate in Hawaii, that as an investment or maybe future retirement? Is there any specifics? I know that's a broad question, but
Mhm.
anything that you've seen or would suggest that they might um, need to know?
Absolutely. I get inquiries all the time. I get once in a while the random calls. Most of them are from my realtor partners, but people are always interested in getting that second home here, getting that investment
Right.
here. For future use. They're sitting on some money. They sold their house and they'd like to have an investment somewhere else. So the first thing is to remember that with an investment property, the magic number is 25% down. You could buy an investment property for 20% down, and in some cases, even 15% down. But what happens is it becomes more cost prohibitive because, conventional lending and even jumbo would require, it's more risk. It represents more risk to a lender to have an investment property because it's dependent upon the renters and income coming
Right.
in. So typically lenders do like to see a 25% down or more. So that's the first thing. Number one, for investors to have a minimum of 25% down. And that way they would get, more, I guess, favorable pricing in terms of rate and loan discount points at 25% down than they would at 20. The second thing is of course knowing the numbers, because I get people asked all the time asking me what are the market rents and so forth. So of course, that's I think definitely a real estate question, and obviously for a real estate professional. But in my experience, I typically kind of know what a conservative market rent might be, based on the applications I'm doing for, a 3-bedroom house or a 4-bedroom house, or maybe a typical condo that might be somewhere in the neighborhood of maybe 10 to 15 years old. And so having a lender knowledgeable in that market is another thing, and having a realtor knowledgeable in that market is another thing, because a single family house renting in, let's say, urban Honolulu, more east Honolulu, might command more rent than a house being rented, let's say, outside of Honolulu, further west. And so it's still considered Honolulu, but Honolulu has literally like over a dozen zip codes, and every zip code is pretty unique. And so, having a realtor knowing, the market rents and being able to refer to that's another thing. So having, knowledgeable a loan officer and a real estate person. And I think the third thing is, of course, asking yourself, what is your long-term goal? If this investment property is really kind of like, you're 60 years old, you're going to retire in 5 years, and this is really going to be, steady income, then maybe it might require more of a down payment, so that net income coming in is going to, support your
Right.
income goals. Whereas if you're an investor and say, you know what, I'm riding the market, I think, I want to buy an investment property, I'm going to sell it in 3 to 5 years. That's important for me as a lender to know, because I might not want to put you in a 30-year 30-year mortgage. It might be more appropriate for 15, or maybe even an adjustable rate mortgage might
Right.
be more appropriate, right? And so having you have that cash flow. So knowing your long-term and short-term goals for the property, in that case, will really help determine and help the lender, kind of craft a plan for you in terms of financing. And so I think remembering those three things: so down payment, having knowledgeable realtor and loan officer to work with, and knowing your goals for that property. I think those are the three very important things to consider if you're going to be investing in property in Hawaii or elsewhere.
Excellent points. And of course, Global Real Estate School, we now offer the salespersons and brokers courses in Hawaii. So I'm getting more familiar with the license law and different things. But one of the items, I prepare these little cheat sheets for passing the test, and it's not really, we're not cheating. I'm just taking the test booklet, and
Cliff
they ask
notes. We'll call them
specific
cliff notes.
questions. Yeah, that's right, exactly. And so one of them is, discuss why the student needs to know why it's good to use a local lender. And really, when you think about what you just said, and also, which another thing a lot of us don't think about on the mainland, is the times difference. I have to make sure my students know that at 9 o'clock I'm going to bed, or 10 o'clock at night. Well, it's only 3 or 4 in the afternoon in Hawaii. A lot of students may not begin studying until after they get home from work. And so I have a lady in Hawaii that can help me. But those were logistics I had to think about. So, you're there, and you can get in touch with the title company or any of these issues that come up, or the real estate agent, because you're on the same time zone. And if they're trying to do this with a lender on the mainland, that's going to be kind of complicated and make it a little more challenging. So, well, Alan, it's been a pleasure talking to you. I know your time's very valuable, and this has been great. And we'll have Alan's contact information down below. If you need help, we have a lot of our folks in Hawaii who will be watching. Reach out to Alan. You're a new agent. Again, it's so important to find a loan officer that you can work with. There's a lot of great loan officers out there, but it's always, I think, important to find a loan officer who can help you, and that you can call and say, Alan, I've got these people. Here's the situation. And then he can figure out if he can make it work or not. Alan, I've had my license since 1978 when I was 18. And
Wow.
back in the 1980s, back then, we did a lot of pre-qualifying on our own, but then we had some loan officers that would come down from St. Louis, and some loan officers would just tell us anything, hoping they could get the loan together.
Mm.
And it was so discouraging and disheartening because you would write a contract and you would get, a few weeks into the deal, and then the loan officer would say, no, I can't make that work. And I found a couple of people that were just straight shooters. They wouldn't take a deal if they didn't think they could make it work. And, that was so important for me. And that's one of the things I like about USA Mortgage is you don't get paid unless you close the loan. You want to make sure that you're not wasting anybody's time, and you've got great loan products. And so I know you would be a great agent or a great loan officer for our agents to seek out and talk to. So be sure and look up Alan. And first time home buyers, home possibility, was that it, or home possible?
Home Possible
Sounds,
and
yeah,
Home Ready.
home ready. Sounds like great programs. So thank you for sharing that information with us. So I want to thank you for watching the podcast and the YouTube channel. Don't forget Alan's information's down below. Check out USA Mortgage, great organization. I've said this on other podcasts, but Alan and I, back in 2011, 12, I was at a meeting and there was a loan officer there from USA Mortgage. And he was back then, there were so many people that couldn't get home loans because their credit was beat up. And USA Mortgage was really trying to help people rebuild their credit so they could become home buyers. I was so impressed because I thought, how many loan officers are that passionate to try to work with people that they know can't get a loan in 30 days? It'll be 6 months, a year, 2 years, but yet the company had that kind of culture. And that's what I like about USA Mortgage. They just cared about helping people be able to have that American dream of home ownership again. So anyway, thank you so much. Appreciate your time, and appreciate everyone watching our podcast. Have a great
John,
day.
thank you for having me. It's been my pleasure. And yes, first time home buyers, first time agents are my passion. No question is too small or insignificant. And I really enjoy, I think the life of a loan officer is scenarios, right? Scenarios
Right.
from clients, scenarios from realtors. And
That's right.
I never get tired of it. I've been in financial services for nearly 22 years in Hawaii in some shape or form. And it just never gets boring. Every day is a new challenge, and every borrower is unique. Every, situation is unique, and it never gets boring. So I love lending.
Great. And don't forget, real estate agents and soon to be agents, USA Mortgage also has all of those great tools that they can help you with for mailers, video, social media posts. Alan can get you in touch with those resources that they have, but some great tools to help you grow your business as well. So thank you again,
We have
Alan.
yes, we have a fantastic marketing department. I've never seen it. And let me just plug, we have something called the Battleship, and the Battleship is literally a huge printer that I forget, they told me the dimensions on it, but they call it the Battleship. And it can print anything from door knocker printouts to large flyers to open house things. Just have to have about a week's lead time, excuse me. And it's great. Yeah, we put it through the Battleship, and then I get it, shipped here to me in Hawaii in a few days. So it's a
Yeah, I've heard
fantastic
it's
department.
amazing. So very, very cool. Great. Well, thank you, Alan. We'll let you get back to that beautiful Hawaii weather. Although in Missouri, as of the recording of this session, it's been beautiful here today. So,
Oh, great.
all
All right.
right. Thank
I'm
you.
glad. Thank you, John.
Bye. Thank
Bye
you.
bye.
Bye. Thank you for listening to the podcast for Global Real Estate School. I'm John Mayfield, the real estate tech guy. Go out and make it a great day.
Topics discussed on this podcast are for informational purposes only and are not a commitment to lend. Additional terms and conditions apply. Interest rates and products are subject to change without notice and may or may not be available at time of commitment or lock-in. DAS Acquisition Company LLC is not affiliated with or endorsed by any government entity or agency, including the USDA, HUD, or VA. DAS Acquisition Company LLC, doing business as USA Mortgage, MLS number 227262, Equal Housing Opportunity.